Hey, my name is Dr. Giuseppe Palladini, and I welcome you to this channel where we share every week a new episode of Property Lunch with Giuseppe. Welcome to another episode of Lunch with Giuseppe. So, welcome everybody, welcome the community. Today, I have a special guest with me, Paul Davies. Hello, Paul. How are you doing?
Hello, Giuseppe. Very well, very well. Yourself?
Very good, very good. Thank you very much. So, to introduce you properly, you are a property investor now, but you come from, you're currently working as a head of bridging and also commercial finance. So you don't do just normal residential finance, but also commercial finance, standard mortgages, bridging loans, etc. And you're one of the partners at Ramsey and White, which is based in Wales but cover all over UK, right?
Yeah, that's correct. Yeah, spot on there.
Good. So can I ask you, first of all, can you understand my Italian? Yeah.
Yes, I've known you long enough now. Actually, I was thinking yesterday when we first met back in the room in Doncaster. Yeah.
Correct. We were sitting at the same table. So the purpose of this interview is more like to cover the basics of mortgages. We have lots of people that want to get into property, lots of people that are already in property, and they arrive to a point where they struggle with finance. I don't mean just by getting finance, but actually like making finance work for them, so they can be a professional property investor and not just a landlord. So in your early days, why did you choose to be a mortgage broker, first of all, and why property?
Yeah, no, that's a good question. So, firstly, Giuseppe, thank you very much for the invite. I've been following the series with great interest. You've had some really great guests on, some of my clients, and I know what sort of paths and journeys they're on as well. So, firstly, thank you very much for the invite onto this lunch with Giuseppe. I've only actually got a glass of water today, no wine.
You know what? I have my wine. I forgot to tell you. So
no worries. Cheers. Only because I was in the office, I've got water. Otherwise, it would have been wine.
I always hear this excuse, but that's fine. Yes.
Yeah. So a little bit about myself, and obviously why I become a investor, stroke broker as well.
Mm-hmm.
Started in the family business, news agents back in one of the valley towns in South Wales, up until I was a ripe old age of about 37, and then decided I'd had enough of that. Got out of the family business. We sold that, and in between when I knew I was coming out of there for about 3 or 4 years. So I bought my first property in 2009. It was my first residential property, and mortgage broker came to my house and literally spent about 30 minutes with me and charged me £200. That was back in 2009. I thought that was easy. Do you know what I mean? That's easy. That's something I could do. Do you know what I mean? Talk to people, take a bit of information, and get paid for it. And so anyway, I started learning CMAP, and it's all relevant to what you're asking me. Mm-hmm. In the meantime, I'm still working in the family business, and eventually got out of there in 2014.
Yeah.
Got caught up with the credit crunch and everything else, but we managed to get out of there, and we still own the building now. So then I was quite stuck then. Okay, well, what am I going to do? I always wanted to be a mortgage broker, but I wanted instant cash, basically. Mm-hmm. So I decided to do a dumper truck ticket and worked on an open cast mine in South Wales for I think it was about 6 or 7 months, actually. Yeah, 6 or 7 months, and I'll never forget it. It was probably the worst time of my life. I just didn't enjoy it. I didn't enjoy where I was working. I was out in a truck on my own in a big open cast mine. And one October morning, I remember phoning my missus and saying, right, I've had enough. I can't do it anymore. Do you know what I mean? So I jumped off and then said, right, I'm going to get my last 2 CMAP exams passed and become a mortgage broker. Fast forward 3 or 4 months, passed my exams and started as a residential mortgage broker in just across from where I live, a few miles away. So back at the estate agent's job, residential mortgages, first time buyers, etc. All the boring stuff really, but important, and it gave me a great foundation of where I am today in sort of the mortgage broker world. Then fast forward a bit, I joined company in Newport who was working with commercial finance. Biggest eye opener of my life. I did not have a clue. For 6 or 7 months, people were talking about bridging finance, commercial finance. I was like, what am I doing? I was way out of my depth, way out of my depth. But I love playing golf as well. So I probably spent a few days a week then playing golf and trying to learn commercial finance.
Here we go. So, I think it's a great couple, the golf and commercial finance. Do you think that even the jobs that you weren't enjoying too much, do you think those helped you in some way to shape you?
Yeah, massively. I worked in my family business for 20 years, since I was about 15 really. That left school with very little qualifications. And for me, stepping outside then from the family business, even into the open cast mine job, it was like a reality check at the ripe old age of 37. It's like, what's going on here? Do you know what I mean? So I think through determination and the family mainly, do you know what I mean? I want to make sure the family is secure. It's got me where I am today, really. I think that's really important. Yeah.
Yeah, that's absolutely. So when did you join Ramsey White? Well, how long ago?
Yeah, so it's quite interesting actually. Joel set up Ramsey White in May 2018, and so me and Joel had worked together for about a year now. Before we met, the first week we met as working for the old company, we nearly had a bit of a fight due to leads and business. A bit of a joke now, obviously. So Joel set up in 2018. I didn't leave at the time. I wasn't ready. There was a lot of issues going on with stuff. But fast forward 8 weeks, I joined then in 8 or 12 weeks, November 2018. Yeah. So we are coming up to our 3-year anniversary this year. Yeah. It's been a journey. It's been a journey.
Absolutely. I mean, you've been a crucial part of the company as well. You've seen the company growing. You and Joel and the partners. So I had the fortune as well to meet you just at the beginning of your property journey as well. Remember, you were very, very interested in getting to property. You were there looking at all the other people's investing, and you were helping a lot of people to invest in property, you know, giving them the access to finance, but then you weren't doing it. So there are lots of people that do this job for 30, 40 years, and they never realize they could have done it themselves as well. But you realized straight after. So what was the click for you?
It's a really good point, actually. I speak to a number of people. So I bought my first buy-to-let in 2010, 2011 with a good friend of mine. Buy-to-let repayment mortgage. And I managed to buy another 2 in between, sort of 10-year lifespan, really. And I would scratch my head and think to myself, well, why I ain't doing this? Do you know what I mean, what's the reasons? What's holding me back, etc. I think we've had our conversations about this myself.
Yeah.
And then I used to come home every sort of Friday night, Friday afternoon. I'd give Joel a call and say, like, oh, Giuseppe's doing this. All the clients were doing deals. I'm like, what's going on? Like I think it was more just the nervousness of stepping out of your comfort zone. Do you know what I mean? And people didn't really see us, but over the probably 3 to 6 month period, then I'd build up a relationship with people, trying to pick little snippets of, okay, what do we do? What do we do? And it's quite funny actually, because I've sold millions of pounds worth of bridging deals, and it is in the millions, high millions now as well. But we've never done a bridging deal myself on how it works. I mean, so I'm the type of person who wants to know how it works. I mean, so I think the penny dropped in the back end of 2019. I found a deal sourcer in South Wales. Unfortunately, that deal took about a year to complete.
I think that's the one they completed last month.
Yeah, 2 months ago. Yeah. So I think the penny dropped for me late 2019. And I think that's where we fast forwarded then over the last 12 months. Yeah.
Yeah. Right. So let's talk a little bit about finance, mortgages, and everything. Putting the headphones on so you can probably hear. Can you hear me fine? Yeah.
Yeah.
Okay. So let's talk about mortgages. First of all, what is a mortgage? You know, for people that don't know anything at all about mortgages, is that a bad debt, a good debt? What is it?
Yeah. So it's a secured loan against the asset. So I mean, whether it's a two-bed terraced house, a one-bed flat, a semi-commercial unit, or a commercial unit. So it's a secured loan that does need to be paid back eventually.
Okay.
You can either have an interest-only product or a repayment product.
Perfect. And basically, you are leveraging the money from someone else.
Yeah, potentially. Yeah. You're borrowing from a bank to help you to live in the property or use it as an investment property as well.
Okay, that's brilliant. Now, you are a property investor. That means that you've seen as well what a mortgage can do for you. It's not just, you know, you can buy a house and that's it. In terms of property investing, you can see now that having a mortgage is not actually a bad thing. Most people have the idea they have to pay off their mortgage as soon as possible, be debt-free, and then enjoy life. However, that takes 30, 40 years, whatever it takes, 25, whatever the mortgage thing is. And the more I've learned about, you know, I had the same mindset before. You know, I want to do overpayments. I want to pay off my mortgage as soon as possible. Now I'm laughing because, you know, thinking about that. Now that I know the game, because you know better than me, it's a game with the rules. Now that you know the rules of the game, you know that you can leverage that money, increase your mortgage, for example, releasing equity, and then you can buy another property. That's the way I do it. Now, do you see this a lot in the community, you know, in the investors community, that release equity or move the money from one side to another one? Or do you normally see standard mortgages?
No, I just see a mixture really, do you know what I mean? A mixture of people. I see a lot of people with equity in their property and they want to understand how they release that equity to move into investment finance. I mean, it comes with some sort of education from us then as brokers as well, because ultimately you have got to pay that debt down. Do you know what I mean? Whether it's through an inheritance or a repayment vehicle, you still need to pay that debt down. So we see both sides of it. We see people who are happy just to put in the deposits for the buy-to-lets. You know what I mean? And we see people who are looking to happy to try and recycle their cash in as well.
Mm-hmm. Okay. So to cover the basics, let's say one person wants to buy a residential property. What is the minimum deposit they need to put down?
Yeah, that's a good question. So up until I think 2 weeks ago, it was typically 10% deposit, but now they are 95% products coming out.
Okay.
They're out now, which is good. So get in touch if you need 95% residential mortgages, because we do that.
Brilliant.
So typically on a residential mortgage, you need around 10% deposit. Okay, that can be gifted from a blood relative, auntie, uncle, father, son, or it obviously comes from your savings as well.
Mm-hmm.
You know what I mean? They use a sort of a bit of a stress test of about 4.5 times your gross income as well. But that's not taken into consideration your credit cards, your loans that you might have attached to that end as well.
Yeah.
So
that's a 5% basically deposit they need at the moment with certain lenders, and you can have which kind of lenders, of course. Yeah.
Yeah, correct. Yeah, everybody. It's all subject to credit checks, income, debt to income ratios, etc., etc.
Okay. And now let's say another person wants to buy a buy-to-let.
Yeah.
Now, what kind of deposits are we talking now?
Yeah, so typically 25% deposit. Okay.
Mm-hmm.
You can be a first-time buyer, first-time landlord. There are a few products out there. If you earn over £15,000 a year and you're employed, got a solid income, they use a bit of a debt-to-income ratio calculation then as well. So they are them products, and you need 25% deposit. Some lenders do go up to 85% lending at the moment.
Mm-hmm.
I don't recommend them. I'll tell you about them, but I don't recommend them, especially the current climate at the moment. Just in case of potential property price crash. You know what I mean?
Yeah.
But typically across the board, you're looking at 25% deposit.
Okay. Now, in your experience, I know you don't have a crystal ball, of course, but let's say, do you think the interest rate, because at the moment they're very, very low, do you think are going to go up soon, or they're not going to go up? What is your feeling about the interest rate on mortgages for buy-to-let?
Yeah, I don't think they I think they'll stay the same for another 12 months, personally.
Yeah.
I do. I don't think they're going to go any lower. I don't.
Mm-hmm.
Do you know what I mean? Mortgage interest rates, even if they drop, so if we go into negative interest rates with the government, I don't think that is going to have a major impact on borrowing. Do you know what I mean?
Mm-hmm.
Of mortgages, etc. But I guess it's a case of wait and see. We just don't know. It's a crazy world at the moment, as you know.
Yeah.
Every day is different, and we've had this conversation many a time. So they're very competitive rates at the moment. If you're a buyer with your residential mortgages, buy to let, now is the time to get buy-in. Do you know what I mean?
Yeah, I agree. I agree. Right, we have a few people connected here. If you want just to ask questions, just comment below in the videos, or just say hello, just so we can see you that you are there. If you're watching live, just type live. If you're watching it as a replay, we're going to leave it here. Just type replay so we know who is watching. In terms of Paul, in terms of misconceptions in the world of mortgages, what do you think is the biggest misconception? Because from what I see, people think that the mortgages happen instantly, like this. But there is a lot of background work that you do to adjust, the product to the right person.
Yeah.
And from what I can see, I don't know if you have any other, but from what I can see, the biggest misconception is that people think there is a standard, cookie cutter for everybody. They say, okay, this person got the mortgage, I can get it too. But it depends. What's your feeling about this?
It's a great question. It's probably my biggest frustration since being a broker in the last 4 or 5 years. People who know myself, Joel, Dean, and the team at Ramsey and White, we're all here to help each other. Do you know what I mean? We're all investors ourselves, so we see your pain. Do you know what I mean? Facebook groups, property courses, they don't teach you what we know. Do you know what I mean?
Yeah.
We know that every client is different. We know that every deal is different. And we know that every product is different. And you've got to believe, you pay us a fee to get the right deal. We need the correct information to put that deal together.
Mm-hmm.
And I think that's the biggest misconception, is people believe, and I use the old saying, John down the pub has told me I can get 2% rate in a limited company. Yeah, okay, no worries. Good luck, John. Take one to John. Do you know what I mean? And in the beginning, when I started as a broker, obviously business was important, and sometimes you'd even believe that yourself. Do you know what I mean? You'd be like, okay, John down the pub has told Giuseppe he can get 2%. How do I get that deal? How do I get that deal? So I'd spend days trying to get that deal, but then I think the penny dropped about 3 or 4 months in, when we become really busy. You know what I mean? Or the business grew massively. Like, oh no, I mean, let's get, and then you'd go into social media and you see all the groups, and it's just crazy and scary as well. Do you know what I mean?
Yeah.
I think the biggest thing for us at the moment is there's so many brokers out there who are saying, I can get you that deal, I can do this deal, don't go to them, I can do this deal. And do you know what I mean? It's 6 months down the line, they on the same product, they can't get a product.
I like this. I like this, Paul, because that's the point. There's a lot of competition. There's a lot of new mortgage brokers. A lot of people say they can get everything just to get clients on. The problem is speed is super important. Speed and certainty. These are the two things in property that's super important. And if you go to the wrong broker, what happens is you're going to waste 2-3 months, and potentially not only you're going to frustrate yourself, but also the vendor. And then you're going to lose the deal because you chose the wrong broker, and probably because of £300-400. You know, you lost a huge deal. They can give you £400-500 a month forever for the sake of, you know, £300-400, whatever the fee is. So I've learned this one the hard way as well. And I know a lot of people that they think like, yeah, they can get mortgages for free, you know, through free online tools. Yes, they can, but it's not a tailored service, which means that if there is any issue, you're stuck, and then you lost time and the deal. So I always say, you know, don't focus on the cost of the tool to dig for gold or diamonds. Just focus on the diamond, because you need that tool. You cannot do it bare hands, you know. And the accountant is exactly the same. You know, pay for the accountant if he's going to save you thousands of pounds. Pay for the broker if he's going to give you the deal. Otherwise, you won't get it. So it's simple, but it's not that simple to explain.
It's true, and I'm happy to admit we just changed an accountants now for the company, and he's telling us stuff that we never even knew was true. Do you know what I mean? But we're paying for that service, and it's going to save us a long term. And then the solicitor stuff, exactly the same. I'm using a solicitor who was a friend of mine when I first started, so he does pretty much deals for nothing for me. But it's 6 weeks in, and I haven't heard anything from him at all. But a bridging deal I'm trying to complete, I'm like, scratch my head. I'm like, okay,
Yeah.
you know what I mean? I see it, my side, but as a broker, it is really frustrating. And I think people buy from people, and we are there to get a deal completed. We don't want you to worry about your deal that you're doing with us. We want you to go and find your next deal. Do you know what I mean? So you might spend 2 weeks chasing a rate. That's what it's basically, chasing a rate, chasing a deal. Somebody's told you they can get you this deal, and then 6 weeks, 8 weeks down the line, that deal doesn't exist, and then you've lost potentially thousands of pounds.
And we done 3 deals together on the same day in November. Do you remember?
Yeah.
That was crazy. Three on the same day from 3 different vendors, from 3 different estate agents, and then from 3 different villages, you know, cities. And the only constant there was you. Because I say, okay, I need to do these three deals. How do I go about it? And don't worry about that. Just focus on the next. Okay. I remember that.
And the first deal was the biggest learning deal, because we had conversations. Oh, why do you need this? Why do you need this? As we do. It's not me. It's the lender. So, and the second deal then was fine. A third deal completed. So I mean, so processes. It's important you understand the process. I think that's the biggest thing. Property investors, they might have a few properties and come to us, but they still don't understand the process of a mortgage. You know what I mean? And that's quite baffling for me. But I think it's because you're being distracted by other brokers, your friend on a pub telling you can do this and do that. Do you know what I mean?
Yeah.
So you focus on what you're good at and leave your professional people focus on what they are good at.
That's true.
That would be my advice.
Yeah, that's true. And then as well, there is a difference in the process between buying a normal buy-to-let with your own name and buying under the limited company. So again, and one thing that I've learned, for example, buying through the limited company is the lenders still ask you for a personal guarantee. Now, at the beginning, to me, it was like, okay, that defeats the purpose of the limited liability, you know, limited company.
Yeah.
So why do I have to give a personal guarantee myself for the deal? And I was struggling a lot. You know, I was very frustrated. I said, why do they need this? And then I realized, hey, wait a minute. They need an extra security. But then, if I don't want to do it, it's simply I don't get the deal. So it's a necessary evil anyway.
No, definitely. And again, courses, etc. Some tell you they don't need a personal guarantee. You shouldn't sign the personal guarantee. But at the end of the day, a personal guarantee is just a tax wrapper.
Yeah.
A limited company is just a tax wrapper for the individual behind the limited company. So yeah, you need a personal guarantee. You're in charge of the company. So I mean,
makes sense.
And that is, me and Joel actually, we've done a deal, our first deal out of the 3 that we got ongoing, and we had to have independent legal advice. And we were sitting in the same office and Zoom call with the solicitor, and she was asking us these questions, and we were like, my God, what are we doing? We're signing our life away, like, do you know what I mean? So, like shoes on the other foot for us, and they're asking the question, and some of the questions they ask are like, oh my God, the world could end, like, you know what I mean? But ultimately, it is just a piece of paper, and we are setting up a property company to make that successful. We do not want to fail. So we've got no issues in signing a personal guarantee. Do you know what I mean?
It's simply that it makes sense from the lender's perspective, but to me it didn't make sense at the beginning. But then if you don't want to do it, don't do it, but you just not getting that mortgage. So you either do it and you get it, or you keep resisting it. In terms of so we're going to talk a little bit about bridging, but I want to know from you, so what's the step-by-step process from the moment a client approach you and say, I want to do this mortgage, you know, what do you require from them?
Yeah, I'll just tell a little bit about how I work with clients. I work a bit differently, I think, from normal investors, normal brokers, because I want to know about what you want to do. Do you know what I mean? A lot of clients have been on courses, but they've never given a clear strategy plan. Do you know what I mean? I always want to know that a little bit more. So I'll have an initial conversation with you, tell me what you want to do. Then I'll have a little thought process in my head, and I'll always remember that. I don't like writing things down, I always keep it in my head. And then I'll send you some fact finds to get completed on file, whether you've got a deal or not. Do you know what I mean? And then I'll always engage pay slips and passports to start with. Bank statements can come when they need to. Let's get you on file, because I've had so many calls on a Friday night at say 5:30, 6 o'clock. I've just had an offer accepted. Can you get me a decision in principle? I love working weekends. I work 7 days a week pretty much. My missus is not happy about that, obviously, but I will do stuff for that. But I can't physically get you a decision in principle without any information. So important to get the information on file, and when the deal rolls in, then we'll have a look at the deal. I'll always analyse the deal as well. Do you know what I mean? To have a look to see if it fits. I've seen some great deals. I've seen some terrible deals. And my biggest thing, and it's my biggest bugbear, I've engaged a solicitor. I've already started searches. Okay, you don't know what product you got. You don't know what lender you got. So do you know that lenders have got their own panel, solicitors, etc.? I'll just slow it all down. I will just slow all the process down. You've had an offer accepted, fantastic, but slow down. Do you know what I mean? Let's get the right deal for you, like so. It's a bit of a process of elimination. And once we got you on file, you're good to go then. You know what I mean? We got a team of people behind us who, I'll just do the deal. I don't do any of the paperwork, the team behind you, and you'll be dedicated case manager. As you work with Rachel, and she'll continue to do so for every deal that you do until you're fed up of speaking to us. Do you know what I mean? So yeah, processes are important, very important.
Okay. In terms of timeline, I know it depends. Let's say everything goes smoothly. What kind of timeline a client should expect?
Yeah, good point. I work on average about 8 weeks. No matter what anybody says, again, brokers 6 weeks, 2 weeks, 3 weeks. Yeah. You got an average of 8 weeks.
Yeah. Can I say how long did you take for mine?
Of course you can.
4 weeks.
4 weeks. Okay, cool.
So you can do. So that.
I didn't know that. I didn't know that because I didn't deal with the back end stuff.
That was a brilliant deal, and you know, everybody. Rachel was brilliant as well, and you cracked on this one. Everybody working together, I loved it. Of course, I knew a lot more now compared to the first time. I knew what you needed as well, so there was no resistance from my side. The beginning was like, why do you need all this stuff? You know, why? But then I realized, I realized what you need. You need for money laundering purposes. You need, you know, the lender may ask you questions you need to verify. So it makes sense. But you cannot possibly know this one when you do the first deal. So of course the first is going to take slightly longer. But then once you work together, we've done 4 deals together already. Yeah. So it makes sense now to be a lot faster.
No, definitely. And we'll back that up, because sometimes lenders will ask us questions that we've never been asked before as well. Do you know what I mean? So we are sort of thrown off then as well. But I think it's all about working together. It's I never used to like the word power team. I didn't. To me, that was a bit cheesy, not my style. But yeah, it's definitely about the power team. You know what I mean? Understanding who you're working with and how they work and get a deal over the line. Like
Paul, talking about bridging, the very first thing that comes to my mind at the beginning of my property journey was the bridging was expensive. Now, yes and no. So what's your view on bridging?
yeah, no, I won't disagree with it. Do you know what I mean? My initial opinion of bridging back 5 years ago was, whoa, it's too expensive. But it just suits the deal. It's where the deal works. You could be buying at auction. You could be buying a below market value transaction. You could be buying a property with no toilet, no kitchen. I had a deal through just before I come on live. He's buying a 4-bed terrace. He's turned into a 5-bed all-ensuite HMO, and he wants to buy it on a buy-to-let product. There's no way. You could get blacklisted. Bridging is expensive, but it's all about talking with your broker about the deal. How does the deal stack? What do you want to achieve with the deal? And then it doesn't become expensive. Me and Joel have done 3 deals since March last year, which is nearly a year now. And they're all on bridging finance. And you know what? It's easy. Do you know what I mean? We're just rolling our money onto other deals. It's because the deal stacks. We've got to have the profit in the deal. I see most people complain about bridging deals when there's no profit in the deal. So why would you want to buy the deal?
I agree with you. And now that I know a little bit more, I know that bridging can help you a lot when standard buy-to-lets cannot help you. Especially if you want to do the buy, refurbish, or refinance deal, or the buy in an auction. When a property, you need a fast turnaround, or you need probably the property is unmortgageable. Whatever reason you have different kind of bridging finance. Now, what kind of percentage can you expect on a bridging finance?
Yeah, so you get up to 75. Let's use 100 grand as an example. 100 grand purchase price. So you'd get 75% gross of the 100 grand, but then they deduct the interest. So you get net roughly £70,000. So you need £30,000 deposit.
Yeah.
So all the fees and interest are deducted, and let's say it's a 9-month deal. Okay. So you got no monthly payments for 9 months then, Giuseppe. All right. And probably you're around 0.85% a month on average per deal. So
you roll up the interest.
Yeah, so they'll deduct the interest, which they'll take about £6,000 worth of interest out of the portion of 75%, and they'll use that then to pay the loan every month for the 9 months. So they'll more or less pay your money for the bridging costs, and then if we refinance in 6 months, then you get 3 months of interest back. If you go the full 9 months, then that interest will be all covered by the money they've retained from the deal as well.
And is that true that you have as well? Yes, you get 75% of the bridging, but you can get 100% of refurb cost?
Yeah, correct. So quite simple example, 100 grand purchase price, and let's say £25,000 worth of work to carry out on the property. So they'll typically then lend you around about 65% net of the purchase price. So you'll have to put a little bit more in as a top up, okay? And then let's say the £25,000 is split into 3 tranches of cash, so £7,500 each. So you'd be expected to put the £7,500 in. So what you'd need is your 35% deposit plus the first third of the development funding to go in, and then a QS. So it depends on the lender. A QS, or maybe a couple of phone calls, will pay that £7,500 back after spent. You'll spend the next £7,500, pay it back, pay the next £7,500. You either need to draw that down, or we're engaging as broker client relationship, and we're exiting that strategy before you draw down the last tranche of money. Just quickly, really important on the bridging.
Yeah.
Don't ever forget, you're going to be soft costs, a valuation fee. You're going to pay the lender's legal fees, and you're going to pay your own legal fees. I always costing really for a straight bridge round about £3,000, £3,500 of soft costs without the broker fee as well. So always remember that. A lot of people don't get told that by their brokers, that they're always important.
I agree with that. And now I want to bring you back to the beginning of this interview when you said you saw this mortgage broker coming to your house and half an hour and £200. This is bloody hell, that was easy. Now, given what you say today, I can see there is a lot of knowledge there. So definitely that wasn't easy either, because it's not that you're paying for the 30 minutes, you pay for the years of experience. So
agreed. Yeah, of course. It's a team effort. Do you know what I mean? At the end of the day, property investment is a team effort. And I'm part of some people's team, and I'm not part of some people's team. But I don't think between us at Ramsey and White, myself, Joel, Dean, Chris Holt, who used to work with yourself, Ollie, Chanel, all the case managers, Rachel, Jordan. Between us is a lot of knowledge, It is a lot of knowledge, a lot of powerful knowledge. And yeah, it's a good team. It's a growing business. It's good. I enjoy it.
Good. I can see from your smile.
Yeah, definitely.
Right. Thanks, Paul. I think we were towards the end of the interview. Is there anything in particular you want to advise, like aspiring property investors, so they are going to start for the first time to invest in property? What piece of advice would you give them?
My advice would be just to be careful. Be careful, be sensible, listen to the right people around you. Make sure you got your broker, make sure you got your accountant, make sure you got your solicitor. They're three really important people to be part of your team. And then there's plenty of courses out there who can help you develop. I found I hated networking, I really did. Back 5 years ago, I hated it, absolutely hated it. But I found that networking is an important part of me as a person and my property business and my mortgage business as well. Don't be afraid to go to a networking event, and because there's always somebody who you're going to gel with, always. And I think that's really important, because it's a lonely place, as we know. Property world is a lonely place. You need people around you, don't you?
It is. Only 3% of the UK population is a property investor, so we're talking a very little percentage compared to the total population. And only, I think, 1% is an actual property investor. So the 3% includes as well accidental landlords, for people that inherited property, so they have one buy-to-let and they're sitting there. But only about 1% has more than 5 properties, so it's a professional property investor. So
I agree. And for my best friends who I play golf with, they got drinking with, holidays with, none of them invest in property. They've got no interest whatsoever in what I do. You can imagine how much of a lonely place it would be without the networking events, without Joel and a team. You know what I mean? Like, yeah,
that's true. Well, I hope I can join you at some point for the game of golf.
Yes,
I'm not professional, so just so you know, I just play for fun. When I was at university, we had a 9-hole field there, so it's not like there were lots of bumps on the green. So
I've always wanted to play in Scotland, actually. So I'm more than open for an invite up to Scotland to play some of the best courses in the world there.
We will do it. Promise. Okay, Paul. Thank you so much for the interview. A big cheers to you, and I hope to see you soon.
Thank you for the invite. Really appreciate that.
Thank you. Cheers. Bye-bye.
No worries. Take care.